You guys confuse daily bias so much, but daily bias is genuinely so simple. Simple definition of daily bias is you're asking yourself this one question: are we going longs today, or are we going to short? Based upon my higher time frame confluences, are we looking for shorts today or longs? That's all you're asking yourself. I don't know why it's so complicated, but that's all it literally is. All right. So your daily bias is your directional expectation for the day. All right. Do we have more bullish confluences telling us we're going to push higher, right? So on the higher time frames, your 1 hour, 4 hour daily time frame, based upon those confluences, are they saying we're going to push higher? And if we also have bearish confluences that are saying we're going to push lower on those higher time frames, which one do we have more of? Do we have more bullish confluences telling us we're going to push higher, or bearish confluences telling us we're going to push lower? All right, so remember that your daily bias also is not, it doesn't exactly equal to a prediction. All right, your bias is simply just your framework. All right, not a guarantee of where price is going to go, because I could have one day where we have a bullish bias, but then my model is saying, yo, you're about to take a short trade. All right, you basically, your model is saying we're taking shorts when your daily bias is saying we're taking longs. What does that mean for my model? Well, me personally, with my model, I say, yeah, I don't care. You can trade against the trend, right? Because that is a whole misconception. People think you have to always trade with the trend, bro. You hear it all the time, bro, but that's a myth. People are saying you trade with the trend. That's a myth, bro. Yes, trading with the trend does give you a stronger trade at the end of the day, but it doesn't mean that trading against the trade is always going to be low probability if you have guaranteed draws of liquidity. All right, so within my model, I have guaranteed draws of liquidity. So if we have a daily bias saying we're going to push bullish, and my model saying we're going to push bearish, I'm going for my low hanging fruit with my model, which means the nearest draws of liquidity. All right. So some common bias mistakes when it comes to traders understanding daily bias. A lot of mistakes that happen when traders are figuring out their daily bias is that they're married to their bias. You shouldn't be forcing a bias all day, bro. If you see that your model is saying one thing, but your bias is saying the other, stop trying to force that bias to say the same thing as your model. If it's not intertwining and not being like the same, don't force it, bro. You can change your bias. People say you have to marry your bias, stick to a bias. That's wrong. That's incorrect. I'm telling you right now, that's incorrect. You cannot be married to your bias. That's like number one mistake a lot of people take on, because you're not changing or adapting. The whole point of trading, being able to adapt to different market conditions, being able to adapt to what price is doing, being able to observe and react. If we're not taking in that new information and changing our bias, then what are we doing, right? But that doesn't also mean you should be trading against the bias based upon, oh, I'm bored, I want to take a trade. All right, you should be analyzing your bias, analyzing your model, seeing if they're intertwined. If they're intertwined, that's great. You send that to the moon, right? Or tank, whichever direction you're looking for. But if they don't intertwine, right? They don't intertwine at all. That doesn't mean exactly don't take a trade. It just means shoot for those low hanging fruit, or at least if you have guaranteed or low hanging fruit within your model. For example, within my model, I have my low hanging fruit. My bottom of structure is always going to be there. That's something to target, or a continuation confluence. If we have bad market conditions like low news, slow, volatile day, and we're trading against the trend, at that point I might just not trade. But if I were to take that low probability setup, I would go for my nearest hanging fruit, because I know like 10 out of 10 times we're going to hit that low hanging fruit within any type of market conditions, within any type of bias that we have. All right, really just stop refusing to flip when the market changes, right? So if we're seeing, going back to that original point, be willing to change your market bias, because it can change depending on the new information that's coming in. So let's actually like look into your higher time frame bias though. So like, what time frames do I use for this higher time frame bias? Depends. If I'm doing my weekly bias, right, coming into the week, I'm going to start on my weekly time frame. I'm going to look at confluences on my weekly. Say we have like a fair value gap. You know, I see us pushing higher. So like right here, I see this weekly fair value gap that we push into, pushing higher out of it. what can I kind of assume for that week? We're most likely going to have bullish momentum throughout the week. All right, so that's just like you're really building a story between all the time frames. If I'm on my weekly bias, I'm looking at my weekly time frame, my daily time frame, my 4 hour, my 1 hour. For weekly, it's mainly weekly, daily, 4 hour. But what I'm doing with all these weekly, daily, and 4 hour time frames is that I'm making a story based upon what I'm seeing on the weekly, daily, and 4 hour. I'm just asking myself that same original question: do we have more confluences telling us we're going to push long or short? It's one or the other. Do not like complicate it. All right. One thing that you do have to realize though is that higher time frame confluences way over lower time frame confluences. So if I have a weekly gap saying we're going to push higher, but then I see a daily gap, right next to that saying we're going to push lower, I'm going to favor that weekly gap simply because it's just a higher time frame. Those higher time frames always rule over lower time frames. All right. Because we already know that prices, like these confluences, are fractal, so we'll see them on each time frame, but what's not the same is the weight that the confluence has. Same thing with 1 minute and like the 5 minute. 5 minutes is always going to roll over to 1 minute. It's like that simple math. All right, so now I'm doing my daily buys. If I'm doing my daily buys, I'm on the daily, the 4 hour, and the 1 hour time frame. Simply just looking at my overall direction for the day. My daily buys, it's simple. A lot of people overcomplicate this. So I'm looking for SMTs. I'm looking for fair value gaps, inverse fair value gaps, stuff that aligns with my even higher time frames, like the weekly time frame. So if I'm seeing all these stuff align, that's my story. That's all I need to see to set my buys for the day. All right, nothing else. All right. So say I'm doing my general analysis. I'm on the 5 minute time frame. All right, 5 minute time frame doing my general analysis is where I'm looking for my model because I already have that bias set in mind. All right. And also one thing, do not like force yourself to think, okay, I need to see longs. I need to see longs since my bias was bullish. I need to see longs. I need to see longs. No, bro. Keep your eye open to both sides of the market. And if both sides of the market are showing you something, that means we have a conflicting day. That means not to trade. Do not trade when we have conflicting days because like we're just going to see chop. If we have great draws for bullish side of the market, great draws of bearish side of the market, like most likely going to chop. And even if we don't chop and we pick a direction, you were confused. And if you're confused, you should not be taking a trade. All right. So there's nothing too much into daily bias. Like honestly, it's identifying the confluences that you already know. What you know for value gap, order block, SMT, liquidity sweep. You can see all these on each and every time frame because they're fractal. You can see them on the 1 minute through the 1 day and 1 week and 1 month and forever on. All right. I'm sure even if we go in the monthly time frame, going 3 month time frame, let's go into 3 months. Guarantee you here, boom, we have a 3 month fair value gap that we can see, that we have yet to push back into. You see these on every single time frame because they're fractal, bro. And they actually work on every single time frame, all right? So that's just one thing to remember. But as daily bias, don't think of it too complicated. You're just asking your question, are we looking for longs or shorts today? Making a story out of it, daily time frame, boom, see a fair value gap, we're gonna push higher. That's all it is. Do not confuse it. See if it lines up with your model. If it lines up with your model, you have even better push for that trade. If it doesn't, go for your low-hanging fruit. That's it. That's your daily bias. All right. You boys have a great rest of your day. See y'all in the next day.